Greetings, guys and gals. Welcome back. Welcome back. It's about that time of day again. Just wrapped up another busy and profitable day in our live trade room. And I wanted to go over some of the patterns that we saw on some of our favorite markets. Now, remember, in our live trade room, we trade gold, crude, euro, Russell. I'll trade the S&P from time to time. We'll trade agriculturals, corn, wheat, soybeans. Guys, it really doesn't matter what we're trading as long as it's got some personality. It's one of the reasons why we love trading crude oil, gold, Russell, and euro. They all have a great market personality to them. Now, today we saw easy patterns on 3 different markets today, and we're going to go over those in just a few moments. Before we jump into this, though, I want to remind you guys, if you're an advanced member of mine, log in every afternoon. I record the entire trade room session, including the morning prep, so you can go in and you can watch what happened today. So if you want to see exactly what we did today, log into your advanced course and watch the recap. I've also posted that recap in the free trial. Pretty cool, huh? So advanced members, you guys already have it in the advanced course, but if you're not a member yet, log into your free trial and you're going to be able to see the same information, right, that we're sharing here with our advanced members, right? That way our trial members can see exactly what they're getting into. Hope you guys had a great day. We had a very slow day without much news this morning. As we always talk about, we always start the day off with our morning prep. I think the morning prep is more important than my cup of green tea and chia seeds every morning, to be honest with you. My morning prep is posted every evening at about 5 p.m. Eastern time. That morning prep goes up for the following day, talking about what news we're looking at, all that fun stuff. This morning we came in and we found out right away there was no news today. There was no major news today. In fact, everything that was supposed to be today was pushed till tomorrow because of the Memorial Day weekend holiday. So just like clockwork, we opened up our live trade room this morning. I had a little bit of a technology issue with one of my monitors, but we quickly got over that and got through the morning prep. We knew there was no major news, so we knew today would be a little bit sleepy, possibly a little bit sloppy, lower volume. But we kept on reminding ourselves today, though, that when we don't have any major news and the volume is really slow out there, it does not mean that we can't take trades, but it does mean that we've got to be very careful not to overtrade and not to give up on our day. That's the worst mistake you can make as a new trader. At 8 o'clock in the morning, the market personality can be one thing, and by 9 o'clock in the morning, that market personality might be a complete polar opposite. Especially if you're trading a market like crude oil or gold, we know that only the littlest bit of change in personality can result in some very, very good trades. So we knew this morning's market personality was going to be a little bit challenging. We knew not to give up on our trades, not to give up on the day, right? We never know when that trade is going to show up. And we also, of course, were watching and waiting for that market personality to kick in. Let's take a look at the first few patterns we saw today. First of all, on gold. On the gold market this morning, we had a fantastic example this morning of what we call the London trading strategy. The London trading strategy says that there's a lot of wisdom in that London trading strategy or that London trading session. The London session starts early in the morning and it goes right about until we start our day here in the US. So this white shaded area, this is my London trading session. Now remember, if you're a member of mine, I provide you with all of these indicators, all the templates, everything's included for you. This is a really simple strategy. We use the London trading session, which again begins early in the morning, goes till about mid-morning, and then what we're going to do is we're going to look for a breakout of that range. So the most common scenario is that price will go above the highs, trade sideways, and then collapse. You might have seen this a few times on other markets. It happened on euro, it happened on crude, it happened on gold. So it happened quite a bit today. This particular pattern on the gold gave you 2 different setups. So remember, this London trading session has a specific range. When I break out of that range, whoop, look for it to come right back down in. There's one example. Second one went up. Second one failed. Now, the first one might have been a little bit too early for you early birds out there. We don't open up our trade room until 8 a.m. Eastern time. So this morning on gold, the first pattern we saw that was tradable for us was right here. So the second example of it collapsing from that reversal zone. And guys, keep in mind too, there is a reversal zone down bottom as well, which means when we go to the lows, we will be looking to buy the lows, right? Same exact thing, except to the opposite side. So we call this the London trading strategy because it uses the London trading session. And then we use a symmetry pattern, a symmetry trade setup to get into the trade. Let's take a look. Here on gold, we know the 5-minute chart told us that earlier this morning we had a symmetrical pattern to take. Now let me zoom out real quickly here. Let me show you what's going on here, because there is that same reversal zone, right? This should look very, very similar. They're the exact same zone, right? The exact same level. So we got 1391 and 1391 is the low of that reversal zone. That's the London session high. Now again, what we saw in the 5-minute, we're now going to use a faster time frame to look for the entry. Price goes above the highs, can't keep going. If it did keep going, I would be buying pullbacks above this, right? But what happened? Goes above the highs, does exactly what we normally see, trades sideways, and then collapses. When it collapses back down in, that's when we know we got those buyers on the run. Now we go in, let's zoom in a little bit closer now, and now you can see the actual pattern itself show up on the chart. It's only good to know direction if you have a way of capitalizing on it. If all we did was call direction, well, we might as well get a job at CNBC or Bloomberg, right? Because that's all those guys do all day long. All they have to do is just paint the picture for direction. Well, for the rest of us out here, we make money by actually taking trades. So knowing the direction is only half the battle. I have to know how to capitalize on it. And part of taking trades is going to be a balance of risk management and reward, and knowing exactly what time of day it is so we're not trading into news, and make sure we're not risking too much. So proper position sizing. Now I know you guys need to learn that stuff, so come out and join me either by the free trial or as an advanced member, and I'll teach you all about proper risk management, proper position sizing, how to make sure that you never risk more than 5% of your trade account, because that will guarantee your long-term success. Right? It's worked for me over the years. It'll work for you too. Now, you might be thinking, Joe, did you cherry pick this one? No, absolutely not. What do I need to get short? Again, we go up into that reversal zone, we collapse, right? I need what? I need an entry trigger. Do we see any entry signals here? No, those are green, those are buys. Those are buys. One of the things we love about our indicator package is that it keeps us out of the trades at the wrong time. This is very useful because you can see what happened. Now all of a sudden we make a new lower low. Once we make that new lower low, look at the inflection point. Right? Look at the inflection point on that. What was support becomes resistance. And this is an easy way to do it. I'm going to use my A down to B. B up to C. C, of course, hits that inflection point. It also tags the trigger zone. Again, A down to B, B up to C. Now, this is a good example here. It didn't quite test that trigger zone. So it's a good idea to be patient to get into that trade, right? Wait until you really see that thing start to go. That's when you know you've got those sellers in control. Where do we take profit on this? We take profit in two locations. First of all, my first profit target will come off at the B. Why do we take a profit target off at B? Because at this point, we haven't been confirmed that this is really going to be a moving market. For all we know, this may just be a bounce off the B and it may go right up against us. So we're always trying to protect capital first. We're always thinking about protecting capital, which most of the time means following a simple set of rules. The simple set of rules tells me that I will take my first profit target off at B. What about the second profit target? Well, this one's even easier. I'm going to measure from A down to B, and the distance from A to B will be the same distance from C to D. Remember, when it comes to our symmetry pattern, A to B is equal to C to D. That means the range from A to B is the same distance as the range from C to D. Now, the reason why this works so well is because the D point is a reversal location. And you're going to notice that most often this price will reverse. You can see nice reversal there. So you've got the new lower low. A, I take it down to B. B tells me where to look for the entry, right? We call that the trigger zone. B goes up into C. In this case, it hovered right around that trigger zone. Remember, we're going to wait. We really would rather have this thing go up into that trigger zone. In fact, I'd rather have it above that trigger zone and then have it come down. In all reality, though, this one today did not get up into that trigger zone. So it's probably going to take a little bit of patience here, right? You'll get in a little bit later than you normally would, but it's worth it because we just haven't seen that price move up into that trigger zone. Now remember, we had just come out of that reversal zone, so we know those sellers are in control. It was just a matter of finding the pattern. And there's your A to B, B to C, C is your entry, B is your first target, and then remember, A to B is equal to C to D. Had to wait a little bit for that D target to be filled. You can see, though, a very good trade there for all you gold traders this morning in the room. Okay, excellent job, excellent job. And this is a great pattern, right? Simple pattern, easy to take. Guys, if you can follow these red signals, if you can listen to me say exactly where you're going to be looking for that signal, and then if you can open your eyes and take that short when you see that signal, you're going to have a great career with me in the live trade room. I make it very easy to shadow trade. That was gold. Now we got gold behind us. Let's talk about the euro. Now the euro was another one of those easy trading strategies this morning. Here are three examples of three of the same pattern, which we call the inside out. Now the inside out uses specifically the previous high of day and the previous low of day. Right? If you zoom back in time here, you can see these are the highs of the day, right, from the last few days. So we know we had the previous high of day. This could also be the opposite, the previous low of day. Doesn't matter. We have a specific clue that we use, and that is when price breaks above that previous high of day and then comes back in. Wait. Didn't we just see this on gold? Very similar, absolutely. So what's the difference? Well, gold uses the London trading session. This is now using the 24-hour previous high of day, right? Whatever the high of day was from yesterday, or the day before that, or the day before that. I'll actually go back 5 previous highs, and I'll use all 5 of those days. Remember how I always talk about paying my bills with my trade account? Remember how in our training sessions, members, how we're always talking about how we need a method that will provide us with opportunities every day we trade? This is no different. I love having a strategy that we'll use, whether it be the London's highs or whether it be yesterday's highs or whether it be a trend line or a channel. Guys, if I'm paying my bills out of my trade account, I can't pay the rent, I can't pay the loan payments, I can't pay in IOUs. It's so important that you choose a strategy that works every day. We have both trending and non-trending setups. This is an inside out. This is a non-trending setup. This is a price reversal or a sideways setup. And again, on this particular setup, we're going to see 3 examples. We go above the previous high of day, we fail, there's 1. Go above the previous high of day, whoop, we fail, there's 2. Go above didn't get above it this time, but here's a really good example of a new lower low. We tested the lows, we tested that previous high of day at 29.52, and there's a 3rd example. The 3rd one you can see, though, would probably be the marginal example of this. This is called the inside out setup. One of my favorites. I've been trading this setup almost as long as I've been trading as a whole. Been doing this 12 years now. This inside out setup's been one of my favorites over the past 10 years. So now let's take a look at how you capitalize on it. It's not enough to know where it's probably going to go. Open up that euro, and here's how you capitalize on it. Let's go back in time here because we did get 2 examples here, right, of this inside out. We actually got 3 of them. And you can see right here, there's your previous high of day, right? And you can see that's very, very similar to what we just looked at. Right? Here's your euro. There's that previous high of day. Again, 29.52, 29.52, right? So these are the exact same. And just like we saw on gold, Once I see price, now remember, this happens to be the previous high of day. This could easily have been the London highs. Once we see it collapse back down in, all we need is a sell signal. That's the key. So as you'll see right here, we get a bunch of buy signals. No thanks. As we always talk about in training, the entry signals are not intended to be, we're not going to be taking every one of them. We're not taking every single entry signal. But sure enough, though, if you stay patient, you're going to see those perfect entry signals. Here's an example of one right here. Here on the euro. Again, you'll notice we got below the previous high of day. So, Joe, why didn't you get short then? Well, because the indicator package we use tells us to stay away. And don't get me wrong, guys. If we would have kept on going, I would have been buying pullbacks there. Don't you worry about that, right? This setup goes two ways. If we blow right through that previous high of day and then keep going, I'll be buying pullbacks all the way till the cows come home. Okay, above the previous high of day, we know the buyers are in charge. But the big deal here is when we fail. When I fail above that previous high of day, that tells me we have what? If you were with me in the trading summit in Vegas over the weekend, we call this what? We call this price rejection. Were you with me in Vegas last week for our live trading event? If you were, you learned all about price rejection. Price rejection, and not to worry, we'll be doing another live trading event in Vegas in November 21 through the 22nd. So we see price rejection now at the highs. All I need now is to get an entry signal to get me in short. And you're going to see it right here. We come off the highs. There's your A, your B, your C. Now we're getting the entry signals. So, Joe, can I take every single signal that I see? Absolutely not. It would be irresponsible and naive to think that an indicator could do all that work. I'm going to have to use my cabeza just a little bit. I'm going to have to use the old brain to think, is this the right location to be taking this trade? And guys, that's where I come in. That's where my value is in the trade room. Anybody can just sit back and take every signal, right, the indicator fires off. But a professional knows not every signal we want to be taking. This was a great example of an easy ABCD. We call this the symmetry setup. It's one of my favorite ways to get into a trade. I'm a big fan of selling retracements for a short, buying pullbacks for a long. And remember, guys, A to B is equal to C to D. First target comes off at B. Second target comes off at D. It's as easy as whistling Dixie, right? Very, very easy. Now you can see that's a nice little small winner there for you on that trade on euro. You'll notice once again here. Now, what about this one, Joe? Why didn't you take this one? See, I caught you, Joe. I caught you cherry picking, Joe. You didn't take that one. No, you're right, I didn't. Why didn't we take this one? There's two reasons why you won't take this pattern. First reason, never tested the trigger zone. Right? I go A to B, take out my Fibonacci tool, A to B. We never tested the trigger zone. Right? We got close, but no cigar. The second thing was the cross. We never like to take these signals. And members, if you haven't learned this part yet, take notes here. When we see a flat set of trigger lines, right? Flat moving averages. We had a green signal immediately followed by a red signal. What do we always talk about is one of the most important filters for a trade signal? A big cloud. There was no difference between the two moving averages. That means that there was no moving market. So two big red flags on that one. One was the lack of the test of that trigger zone. Second, of course, was the lack of having any cloud. Now, you're not done yet. Remember, there was 3 examples here. And you're going to see here again, nothing there, no entry short there, keep on going. Nothing there, no entry short there, keep on going. This time around, now we start to see those entry signals. Right? Can you see them? There's your A. A goes down to B. Again, we're back below that previous high of day. B now retraces up into C. It tests that trigger zone, right, which is where that red box was. Now we wait for the entry signal. Entry signal fires off. There was actually 3 of them. 1 signal, 2 and 3 signals. Stop loss goes above the C. Make sure that trade is less than 5% of your trade account as far as maximum risk. That's a great example now of a test of the trigger zone of an entry signal short. We're on the right side of the market. Again, we knew that once we got below that previous high of day, we have the option now to get short. The pattern sets up 2 times here on this entry chart. Again, first target comes off at B. Second target comes off at D, A to B, C to D, right? These are going to be equal in range. Stop loss goes above the C. First profit target off at B, second profit target off at D. Guys, again, it's not difficult. This is very, very simple. Now, could I have made some more money on that big drop on crude? I'm sorry, on the euro? Most likely. Most likely. But in all reality, guys, don't forget, a bird in the hand is worth 2 in the bush. As a new trader, yeah, I might have been able to get some more money out of this. But in all reality, though, we want to make sure we lock up that profit and hit the exits. Especially since for a new trader, many of us are going to be building our trade accounts with this stuff. And then last but not least, we have the mighty crude. Crude oil was one of my favorites today. Crude oil was a little bit challenging on crude here. We ended up having a pretty good session towards the end of the day here on crude. Now, again, here's another example of another one of those easy trade setups on crude. Now, remember, we used this London trading session. We called this way ahead of time this morning. Price jumps up, fails. Once we get that close below that London high, it's just like the inside out setup, just like we saw on gold. Now we start looking for a short. It was funny because we called this trade short about a half an hour before it actually triggered you to get into that trade. Let's take a look at a few of the patterns we saw in crude, and let's see if you guys saw the same thing. Here is just one of the examples of the patterns we saw in crude oil today. Notice the bear channel? This bear channel we saw a mile away. More importantly, we knew that we had just left that reversal zone. Now, the way in which we'll trade this pattern is I'm going to sell the highs of the bear channel. At the same time, we just witnessed as crude oil was getting ready to fall out of bed and tumble off those highs. This is another very easy trade. I'm looking for an entry signal. That entry signal occurred right at the top of that bear channel. Does it get any better than that? No, it doesn't get any more perfect than that. So the bearish channel is the first clue. The second clue, we end up trading into this resistance, into this trigger zone. Guys, don't forget, first target off at B. On crude oil, though, would have been a very good idea here, and we talked about this morning. Let that thing run all the way down to that London session lows. Crude oil is one of those unique market personalities that, boy, you've got to let that thing run. On the euro, on gold, on the Russell, I'm going to take that money to the bank, right? I'm going to be pretty quick at taking profit on other markets. But we have seen so many times before where crude oil continues to help us by just running and just falling out of bed. So on crude, we had a bear channel. We also had that same London trading strategy that we used on gold. We saw price go up. Did you listen to the crude oil broadcast this morning? If you go to our blog right now, there's a link right on our blog. And every afternoon, we update this with a recording from our crude oil morning prep. Every morning at 7:30 a.m., we do a very unique morning prep for crude oil. And every afternoon, I post the recap of that. And in this recap, I talked about the fact that we were going to be selling at the highs and buying at the lows. We just had to wait for it. So don't forget to check that out on the blog. It'll be worth your time. It always is. Always a very good prep every morning at 7:30 a.m. So crude oil falls out of bed. We use a bearish channel to get into it, right? Or as it kept falling lower, you could easily have used any other entry signals that you need, right? Don't want to take that one? Well, that's a good one there too. So there were plenty of different ways to get into this trade short. A very good day today. A very good day in the trade room. we did a little bit of learning. We did a little bit of earning. If you want to see every single trade we took today, don't forget to come out, join us as part of your free trial. Or if you're an advanced member, just log right into your advanced membership course. And again, today's exact trade stage recap was posted in your advanced course or in your trial section. Thank you so much for being a part of it. Just some of the trades we saw today, just some of the patterns and the opportunities that we saw today in our live trade room. Don't forget, every morning at 8 a.m. Eastern time, we open up that trade room for everybody to come in and learn and earn together. My name is Joseph. We'll see you guys this time again tomorrow. We'll see you in about 23 hours from now for another trading recap. Adios, amigos. Bye-bye for now.